Welcome to the Finance Report. I'm Mallory Hoff alongside David Wilkinson, and we have a lot to get to today.
That's a fact. We'll discuss the importance of a tailor-made retirement plan, the potential cost of all that water cooler talk, and what should be top of mind as you get closer to retirement. The Finance Report starts right now.
This is the Finance Report with Mike Riedmiller, a financial professional and the president of Riedmiller Wealth Management, a financial firm serving Nebraska retirees. Mike is also the popular radio and podcast show host of Smart Retirement Strategies. And now it's time for the Finance Report.
As we get started today, when it comes to planning for retirement, one size does not fit all.
Absolutely not. Mike, my question as we get started is this. How often do you find that people are in a cookie-cutter retirement plan, not one that has been customized for them?
Unfortunately, all too often.
Okay.
Almost on a weekly basis, people coming to my office here in Omaha at 120th and Pacific Street, they think they've got a plan. A 401k, an IRA is not a plan. That's basically a sheltered tax account, basically, growing tax deferred. It's not a plan. So I see it often, unfortunately.
Yeah.
How often do you see people coming in trying to keep up with their neighbor, or as we like to joke about, their brother-in-law, trying to beat him instead of focusing on their own route, their own plan, and their own situation?
Yeah, kind of that noise and that chatter, so to speak, the tips from the brother-in-law, the neighbor, online and all the different places. I see it often, and it's just very common in today's social media age. They saw this, they got that on their phone or the TV or wherever. I see it often.
How do you make sure you're not being pushed into that cookie-cutter or boilerplate plan?
With that, it really comes down to a plan based on values and goals, and having that conversation and maybe taking a step back, not watching the stock market, every tick and up and down, just for even a couple minutes. Although some people, they do that all day, every day. But really, again, taking a step back and thinking about what's really important to you and your spouse and your family.
Yeah.
For a lot of people that are 20, 30, and 40, a big focus, investing, playing the game of the stock market. When you get into that retirement red zone, let's call that 5 to 10 years outside of retirement, how can you make sure you actually have the tailor-made plan? What needs to be included? What questions do you need to ask your advisor to make sure that it is customized for you?
With that, it comes down to investment planning, income planning, and tax strategies. So asking your advisor, how are your investments set up? Do you have a balanced and diversified plan? And have them prove that to you. And then income planning. You want income that meets or beats expenses. The more sources, the better. And then tax strategies, looking at ways to potentially reduce taxes in the future, whether it's Roth conversions or some of the other strategies people might not be aware of.
Silly question, though. How do you get your advisor to prove to you something?
Yeah, with that, well, there's different ways to do that. You can look at rates of returns. You can look at performance history. They should be able to produce a number of different reports, and having that conversation, making sure things are up to date. And just like some people might get a second opinion from a doctor or medical professional, it can be very common for people to want a second opinion when it comes to their nest egg and their life savings.
All right, so at what point then do you say, okay, it's time to go for that second opinion. I don't want to wait any longer on that?
Well, with that, for everybody, it can be different, but if you're in that retirement red zone, coming up on retirement, or especially already retired, it can be important because the market moves fast. You know, in Omaha, Dodge Street, the speed limit's 70 miles an hour. Some people might drive a little faster than that, but the stock market literally moves at 200 miles an hour. I mean, some news out there, whether social media or a world event, can have an effect in a matter of minutes. And I don't know if people have noticed, but a tweet online from certain people can move the market.
You don't say.
Yeah, you don't say. Just a newsflash. So with that, you might want to have some preparedness, because the old wait and see, I'm going to wait and see what happens with the election, or wait and see after the summer or after the holidays or this or that. The market is not waiting and seeing. It is moving. It's moving fast.
And with all of that in mind, the time to act is now.
Yes, indeed. Today, exclusively for our Finance Report viewers, Riedmiller Wealth Management has an offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow the team to sit down with you personally and provide you with a roadmap, analyzing where you are right now and then discuss your next steps to really get ready for a confident retirement. The number to call right now, 402-791-6177. That's 402-791-6177. If the lines are busy, leave a message with your name and number, and the team will call you back.
And as we continue our conversation now, I want to talk about saving the right amount for retirement. A lot of people are under the impression that if they save a certain amount, they'll be in good shape when it comes to retirement.
So, Mike, your thoughts on this, the magic number. I need $1 million, I need $2 million, $3 million, $4 million, and so on.
In retirement, there is no magic number. You've got to have a customized and tailored plan because everybody's number is going to be different. Because let's think about it. People watching this show right now, some are married, some are widowed or single, some are still working, some are retired, some have kids, grandkids, some don't. Everybody's number is going to be different. But here's the thing I know. For people in and around Omaha or throughout Nebraska or Iowa, most of them, they're not looking to buy a yacht or a Ferrari or a second home in France. They just want a comfortable retirement with more confidence, and it starts with that casual conversation. Here's the thing we've got to be aware of. Wall Street has a plan for everybody's money. Might not be in everybody's interest to be all in with Wall Street, especially coming up on retirement or already retired. But back to your original, the magic number, there's no one magic number that fits everybody.
All right, so let's say you are someone, though, or a couple that just read one too many articles that said if you save $1 million, you'll be in good shape, $2 million, you'll be in good shape. You were so fixated on that number, and that's what you've saved up to. If you're in that boat, how can you backtrack now and make sure you're in the right position?
Well, that planning process from investment planning, income planning, and tax strategies, utilizing all of those different things. We've got to look at expenses. We've got to think about future taxes, long-term care costs, factor in Social Security. Have you started it or not? There's so many different things. And then also inflation. We've got to factor in inflation into income planning and everything else. So a lot of different things. That's why two different people or married couples, they might both be in their mid-60s, have a similar net worth. They walk in my office, and one person, their goals and situation could be entirely different than the other person's. That's where that casual conversation leading to a customized plan can be beneficial to them.
Maybe marriage counseling as well.
Maybe,
Just kidding.
Along the way. Well, that's outside my realm, but I have mediated before.
I have no doubt.
Trying to keep everybody happy, everybody on the same page.
A very talented financial professional right there. But let me ask you, you also talk about the people that come in with maybe the same amount of money. Depending on the time, sequence of returns is something they need to be thinking about.
Yes, sequence of returns risk can be a huge risk in retirement. In other words, the order of the returns. In other words, in early years of retirement, if you have down years, if the stock market's down in those early years of retirement, and especially if you're withdrawing money, there could be some risks to maybe depleting your account sooner. So it's not something you think about when you're younger, because if you're younger, 20s, 30s, 40s, you have more time to make up for market losses. Also, if the market's down, you're still investing, your dollar cost averaging. Well, once you're already retired, you're not contributing to your accounts anymore. Market downturns have no positive impact on your situation. But sequence of returns, that's something a lot of people are not aware of or really don't truly understand the potential impact of what that could look like.
Mike, even if someone's not shooting for that Ferrari or the yacht, they just want to maintain their lifestyle in retirement. From your experience, what is the best way to truly be able to spend with confidence?
It comes down to income planning and making sure you have more income than expenses and having income from multiple sources. Because you walk out the door from your job or you sell your business in that last day and the paycheck stops, the bills continue to come and inflation keeps coming. When you're retired, you might want to go out to eat more often. You want to buy something for the grandkids. You want to go golfing, take some of those trips. Well, the costs now that we're seeing today, they're more than what we saw 5 or 10 years ago. Just think what costs could be in the next 2 to 5 to 10 to 20 years, likely to continue to increase.
Can we put a plan together that can potentially outpace inflation?
We could, yes, but it's likely not going to happen by accident. So we've got to have the multiple income sources and look at expenses and just put a lot of things together. We've got to sharpen the pencils. We can't hope that this works out. Because look, if you're working, let's say you had a certain salary coming in, whether it's $50,000 a year or $100,000 or $200,000 a year, you had so much coming in every week or every month, you could budget for that. Once that goes away, now it's Social Security, and then, well, how much do you withdraw from your accounts? There's a certain percentage you might want to withdraw from your accounts, but you've got to also monitor how the market's performing and a number of different factors. That's where, again, we've got to sharpen that pencil, make sure we get that right, because we're planning for a lot of people for the next 20 years or beyond.
No mulligans in retirement, Mike. Thank you. And if you want to make sure you're taking the right approach to planning for retirement today, exclusively for our Finance Report viewers, Riedmiller Wealth Management has an offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan. This will allow the team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your next steps to really get ready for retirement. The number to call right now, 402-791-6177. Once again, that number, 402-791-6177. If the lines are busy, leave a message with your name and your number, and the team will call you back.
So many retirees won't have a lifetime pension income to rely on. Instead, they'll rely on their workplace retirement plan, which for some may hover around $1 million.
That's right. So, Mike, for the middle-class millionaire, what do you feel their strategy should be for retirement?
Mallory, I find here in Omaha and the surrounding area, a lot of people do not have an asset problem. They have an income problem. And specifically with that income in the future, a lot of people, they might get hit with taxes. So we've got to take a hard look at that, because with taxes, if you have an IRA or a 401k, it's a joint account and your joint partner is Uncle Sam. So what do I mean? For every dollar you withdraw from that, you get some of that, probably the majority, but Uncle Sam gets his cut. So that is not something you own. Because let's think about it. If you've got $1 million in an IRA and you take that out, you don't get to keep the $1 million. You're going to have to pay taxes on that. A lot of people are not aware of that. See, what we don't want is where the IRA becomes an IOU to the IRS and Uncle Sam. It's a partnership. It's a relative that we don't want much to do with in retirement. A lot of people not thinking about that, but income planning, very important. Tax strategies. We got to take a hard look at that. I see people walk in my office every week and haven't even thought about that, and that can be vital.
Absolutely. You bring up 401ks. What other mistakes besides the tax strategization are you seeing people overlook that could cost them big?
Where do I start? How much time do we have, David?
As
this
much
is
as you
30
want.
minutes.
Your program, sir.
Okay.
Go to
All
town.
right. Well, can we expand? Because I could go on and on. 401k, sometimes these target date funds, I see people, they got the target date fund and really not aware of what that entails. I've had people tell me, okay, I thought I had a conservative target date fund. The target date is just a few years from now, but when the market's down, I lost a bunch of money. I didn't think it was supposed to perform that way. Target date funds are kind of set it and forget it. Maybe not the best things. Look, in a rising market, they'll likely make money, but in a down market, you might have more risks than you're really aware of. So I see that. I see people that don't have a customized plan. They don't have an income plan. They've never thought about tax strategies. A 401k and an IRA is not a retirement plan. And a lot of times too, I'll see people, they come in and maybe a mishmash of different investments and accounts. They got an old 401k over here at an old employer. They got a 401k with their current employer. They have an IRA at this brokerage firm, another IRA here. They've got some life insurance. They bought an annuity along the way. And sometimes they bring in account statements and seriously, they say, I don't even know what I have. Take a look. And I've got to educate them on what they've got for their own accounts. There's some real risks there if you don't even know what you have.
So, Mike, I think oftentimes on this show, we spend a lot of time talking about the cost of procrastination. There's also an incredible potential cost of disorganization. Am I hearing you correctly?
Yes, for sure. Yeah, not being organized. Look, if you're organized in any area of your life, whether it's your finances, your health, your wellness, or whatever the case, there's more likely you can have added confidence, so you're going to be able to maybe achieve those goals. Where if you're unorganized, it's just then hope is your strategy, but hope is not a good strategy. Hope is not a strategy that's going to lead to confidence or maybe to the desired outcome.
How have you seen this approach really help a lot of people get ahead, get more out of their money?
If you're going to build a house, you're going to have a blueprint. a blueprint can be the right thing for retirement also. Because think about, if you're going to build a house, if the contractor showed up the first day, you're there on the property, say, okay, wait a second, I haven't even seen the plans yet. They said, well, hey, we've got it. You know, we got Whitey over here and old Red over there and Johnny there. And boy, they framed a lot of houses. We're going to wing it. And don't worry. I talked to your brother-in-law already. He told me what you want. I searched the internet. I watched a couple videos. We've got this. What kind of house are you going to have? You're not a very good one. Yeah, not one you're buying, not one you're going to want to live in. No, the roof's probably going to leak. There's going to be troubles with the foundations. You think that's going to be around in 20 or 30 years? Probably not. Maybe the same thing with a financial plan or a lack of one, where again, a lot of people really don't have that plan in place. That's where it could be advantageous to maybe have that conversation for the first time, or even if you think you do have a plan, maybe get a second opinion.
All right, not the right stuff, which means the time to act is now.
Yeah, absolutely. Make sure that Whitey, Red, and Johnny aren't building your retirement plan. Have the right strategies to help you get the most out of your savings. Today, exclusively for our Finance Report viewers, Riedmiller Wealth Management has an offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow the team to sit down with you personally and provide you with a roadmap, analyzing where you are right now, and then discuss your next steps to really get ready for a confident retirement. The number to call right now, 402-791-6177. That's 402-791-6177. If the lines are busy, leave a message with your name and number, and the team will call you back.
Market volatility, it's part of the ride if you're invested in the stock market, but how will your portfolio fare if and when the next major market correction occurs?
Yeah, it's an important question to ask, Mike. So if you're approaching retirement, if you're already in retirement, what do you need to know about your investments and how much you have actually in the market?
Yeah, that can be very important because a lot of people listening right now, they're in their late 50s, 60s, 70s, even early 80s, maybe not aware of all the risks that they have in their investments because the market moves fast. Nobody knows what's coming next or what could happen or what the impact could be of the next economic cycle, the next news event, the next tweet, the next thing online. Those can all move the market in a very short period of time.
So you've had people begin working with you after suffering a pretty big loss somewhere else. Tell me what that process can look like. Paint me a picture.
Yeah, suffering a big loss, you know, it can be a challenging or difficult conversation because there's some real emotions that usually come to the surface, and sometimes there's fear, sometimes anger. A lot of times we're not really aware of how they were invested or maybe all the different risks that they had. But it just starts with that casual conversation, and we take a look at their investments and see which investments are maybe doing better, which are underperforming. There's different analysis and things that we can do, but it's all around their goals and their situation. But yeah, that's an important conversation to have.
Yeah.
You've said that Wall Street has a plan for our money. What do you mean by that?
Yes, Wall Street has got a plan for all of our money, all the listeners' money. That plan is to stay invested all the time. When the market's up, you're likely to be up. Unfortunately, when the market's down, you're probably going to be down and just ride it out. Well, maybe that's not the best plan for you when you're retired. Look, when you're in your 20s or 30s, that's fine. You've got decades to recover from market losses. You're still contributing. If you're in your 60s or 70s, coming up on retirement or already retired, there's some risks there that you might not be aware of. A retirement plan is a lot more than stocks, bonds, mutual funds, chasing that return, chasing that hot stock tip. You know, a quick story, I've had people, they've told me whether we're in meetings or they've called me and said, okay, here's the stock I want to buy, or here's the stock tip, and I want to do this or that. And literally anywhere 2 weeks later, 2 months later, they say, okay, I'm bailing on that, I'm getting out. Well, okay, wait a second, what happened? Well, my neighbor or so-and-so or this person or my brother-in-law told me about it, but it didn't pan out. And a lot of times there's losses there and they have to get out. So the rumors, the misinformation, all that noise that's out there, a lot of times it's not what's best for someone in their situation.
So if you're in retirement and that big loss happens, I often hear, okay, look, the reality is you're not going to have the lifestyle you wanted in retirement, or you're going back to work. When should you start planning to potentially avoid that fate?
Well, usually 5 to 10 years prior to retirement, you want to take a hard look at that.
Yeah.
Now, it can be tempting to keep the pedal to the metal, so to speak, stay fully invested. But if you have a big loss in your account within even 1 to 2 years prior to retirement, even 5 years, but even the closer to retirement, the more detrimental that it can be, because you need time to make up for it. Because once you're retired, you're unlikely that you're continuing to contribute to the account, and you're probably going to want to take some withdrawals and distributions. It might be part of your income plan.
It's one thing to tell somebody how much they might potentially lose. Are you able to show them potentially how much they can lose? Do you run something for them? Do you actually say, this is what, right now with your investment structure, a 30% dip would actually look like for you and your assets?
Oh yeah, yeah, we sharpen the pencil and we'll show the numbers and show them on paper what that could look like. Let's just do some simple math. If somebody's got $1 million account and their investments go down 30%, they're at $700,000. Well, again, is that going to come back? Well, maybe if you give it enough time and you don't withdraw from it, but that can be challenging, especially once you have to start taking required minimum distributions from the account. Every year those have to come out if it's a qualified account like an IRA or 401k.
That big loss, certainly a place you don't want to find yourself. Mike, thank you. And if you want to make sure you're not taking on more risk than you realize, today, exclusively for our Finance Report viewers, Riedmiller Wealth Management has an offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan just for you. This will allow the team to sit down with you personally and provide you with a roadmap analyzing where you are right now and discuss your next steps to really get ready for retirement. The number to call right now, 402-791-6177. Once again, that number, 402-791-6177. If the lines are busy, leave a message with your name and your number, and the team will call you back.
For some of us, a checklist gets us through the day, and a checklist for your retirement, that can be just as important.
Absolutely. So to simplify things today, Mike, can you break down what a checklist for retirement, in your opinion, should look like?
Yeah, checklists can be very important. You know, Mallory, I think about it, anytime before a plane takes off, the pilot goes through a checklist. Of course. So let's imagine, let's say some of the listeners, they went with their family, we're going to go to Hawaii. They get on the plane and they assume the pilot's going through their checklist. And the pilot comes on the intercom and says, attention, ladies and gentlemen, we're going to be taking off to Hawaii in a little bit, but full disclosure, I have no formal pilot's training. But don't worry, I've watched some videos online. I talked to my brother-in-law. I've read a few articles, and I've got this. So buckle in. Might be a bumpy ride. What would you do?
I think we're running.
We're exiting right now. Exactly. So that's unfortunately how a lot of people plan their retirement. They're looking at rumors and what's online and talking to the neighbor, brother-in-law here and there, just cobbling this information together. But is that going to be a confident retirement? Highly unlikely. So what's a checklist to retirement look like? Well, it starts with income planning, investment planning, also looking at tax strategies. So income planning, the more income, the better. Income should meet and beat expenses. It comes to investment planning, making sure we have a balanced and diversified plan based on that person's situation and goals. And then tax strategies, looking at ways to potentially lowering taxes, which could be one of the biggest expenses people have in retirement, costing them tens of thousands, hundreds of thousands, even millions of dollars in the coming years and decades.
Is it wise or foolish to go about retirement trying to create more income than you actually need?
More income. Never had a complaint with someone saying, Mike, I'm getting paid too much. What can I do? So more income is better. Because look, if you have more income, you can have more confidence. You can have less stress. You can spoil the grandkids. You can take an extra trip. You can give more to charity. So more income is better. I don't know if I've ever ran into anybody who said, I have too much income. And seriously, if you have more income than you need to spend, you can put it in your savings account and build that up. You can put more in some different investments or different financial vehicles, because look, we got inflation, other expenses come up, so the more is better. What's the saying that maybe you can't, there's not such a thing as too much of a good thing? I don't think there's too much, I don't think there's such a thing of too much income, so to speak.
I would agree.
All right, so circling back to that checklist, from your experience, you've been doing this for a long time, what item is most frequently overlooked?
People not knowing how much risk they have in their investments, people not having an income plan, and people not utilizing tax strategies. So again, investment planning, income planning, tax strategies, a lot of times people neglect all of those. They just have something cobbled together, a number of different accounts, and some of them track it and watch the stock market very closely. Others have a set it and forget it mentality, but just not having a coordinated plan that's truly based on their goals and situation.
Yeah. You said it's important to diversify your investments, but what exactly does that mean?
Yeah, with diversification, making sure that you got a proper balance based on your situation. So between people think about stocks, bonds, mutual funds, there's other financial vehicles and potential options out there. So whether money in the bank, money in insurance, annuities, real estate, precious metals. Some people have businesses, some people have real estate. We've got to look at all those different things and how they're working together.
Absolutely. This is not our parents' or our grandparents' retirement. Mike,
No,
with that in mind,
not.
the time to act is now.
Absolutely. If you want to be sure to have the right checklist for your retirement today, exclusively for our Finance Report viewers, Riedmiller Wealth Management has an offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary, full-blown retirement plan just for you. This will allow the team to sit down with you personally and provide you with a roadmap, analyzing where you are right now, and then discuss your next steps to really get ready for a confident retirement. The number to call right now, 402-791-6177. That's 402-791-6177. If the lines are busy, leave a message with your name and number, and the team will call you back. Mike, I want to revisit the discussion about having that second opinion. How often are people hesitant to do that because they've been with their advisor for several years? That advisor's told them, things are great, look how well we've done, and they hesitate to go do that second opinion because of the emotional relationship they feel they might have with that person.
Yeah, I see that often, and it could be to their detriment, because you want to make sure that things are set for more confidence in retirement and so you can achieve those goals. So it's not something you have to be stressed out about, but it can be something that could be very beneficial to you with that. So it's just like you go to a doctor or medical professional, there's no harm in getting a second opinion. Same thing here. There's no harm in getting a second opinion. You can do with that information what you want. If you want to make changes, if it makes sense, great. Maybe you're all set. And if you are all set, we'll tell you that too. But it can be very beneficial to get a second opinion or at least pursue that.
All right, so if you have been putting that conversation off, what do you need to know?
Well, Mallory, time can be of the essence. The market moves fast, things change fast. Get that second opinion. It can give you some more confidence because look, if you're on the right track, you'll want to know. If you're not on the right track, you'd also want to know. Same as if you went to a doctor and wanted a second opinion. So it can be very beneficial.
And I know if our viewers would like that, you have an offer.
I do. I'm really excited about this. For the first 5 callers with a portfolio of $250,000 or greater, I'd like to invite you into the office where the team will sit down with you personally and help you create your very own retirement plan. If the lines are busy, please leave a voicemail and I will commit to calling you back.
Mike, always a pleasure. Thank you for joining us. We appreciate it. And once again, exclusively for our Finance Report viewers, Riedmiller Wealth Management has an offer for you. Right now, for the first 5 callers with a portfolio of $250,000 or greater, they're offering a complimentary full-blown retirement plan.
This will allow the team to sit down with you personally and provide you with a roadmap, analyzing where you are right now, and then discuss your next steps to really get ready for a confident retirement. The number to call, 402-791-6177. And if the lines are busy, leave a message with your name and number, and the team will call you back.
And for all of us here at the Finance Report, thank you so much for watching. We'll see you back here next time.